Hey everyone, welcome back to Corporate Decoder, where we uncover the not-so-hidden secrets of the corporate world. And today we're diving into a deal that is about to make ODP Corporation. You know, the people behind Office Depot and Office Max are a whole lot different. So ODP Corporation, or ODP as they're known, has just filed a report to let everyone know about some pretty big news. Basically, ODP is getting acquired. Imagine your favorite office supply store being bought by another company. That is what is happening here, and the voting results from their special meeting of stockholders are in, and it looks like the deal is moving full steam ahead. The vote happened on the 5th of December, and a whopping 22,656,187 shares were present or sent in by proxy. That is a lot of people either showing up or sending their say ahead of time. To have a quorum where you can actually make decisions, you need a certain number of shares represented, and ODP definitely crossed that threshold. The main event, the thing everyone was voting on, was the merger proposal. This is all about a plan to merge a company called Vail Holdings, One Incorporated, which is a part of a bigger entity called ACR Ocean Resources LLC. With ODP, if everything goes according to plan, ODP will continue to exist, but it will become a wholly owned subsidiary of this parent company. Think of it like ODP being bought and now belonging to a new, larger family. And the votes are in. The merger proposal passed with an overwhelming majority. Over 22.5 million votes were cast in favour of the merger. There were a little over 25,000 votes against it, and about 90,000 abstentions. Essentially, the shareholders are saying yes to this deal. This is a huge indicator that the company's leadership and its shareholders are aligned on this transaction. Besides the main merger vote, the stockholders also voted on something called Golden Parachute Compensation. This is basically a vote to approve certain payments that will or might be made to the top executives of ODP related to this merger. It is a common practice in these kinds of deals to make sure executives are compensated when their company is being acquired. Here, the vote was also in favour, though not quite as overwhelmingly as the merger proposal itself. Nearly 16 million votes were for approving this executive compensation, with a considerable number of votes against, around 6 million, and over 500,000 abstentions. This shows that while the shareholders approved the merger, there might be some differing opinions on the specifics of executive payouts, which is pretty standard. Now, something interesting here is the adjournment proposal. This is usually a backup plan that allows the meeting to be postponed if there isn't enough support for the main proposals. However, because they had a quorum and the merger proposal passed, they didn't even need to vote on adjourning the meeting. That shows a strong consensus was reached beforehand. So, what is next? The deal is expected to close really soon, around the 10th of December. Once that happens, ODP common stock, which you can currently trade on the Nasdaq Global Select Market under the ticker ODP, will be delisted. This means it won't be available for trading on that stock exchange anymore. It's a big sign that the company is officially becoming part of its new parent. Now, like many big deals, there are always potential hurdles. ODP acknowledges the possibility of potential litigation relating to the merger. This happens when shareholders or other parties might sue over the terms of the deal, claiming it is not fair or that the process wasn't handled correctly. This is a risk all companies face during major acquisitions, and it can sometimes delay or even derail a deal. Though in this case, with such strong stockholder approval, it seems less likely to be a major issue. They also mentioned the satisfaction of other conditions to the completion of the merger, including obtaining required shareholder and regulatory approvals. While shareholder approval is now out of the way, they still need to get the green light from any necessary regulatory bodies. These are often antitrust reviews to make sure the merger doesn't create a monopoly or harm competition. Another big point they highlight is the risk that disruptions from the merger will harm ODP's business. When a company is being acquired, it can be a distraction. Employees might worry about their jobs, customers might get nervous about changes, and day-to-day operations can suffer. ODP is basically warning that this transition period could impact their performance. They also point out the challenge of retaining and hiring key personnel, which is crucial to keeping the business running smoothly during and after the acquisition. For more detailed risks and information, ODP points everyone to their annual report, their Form 10K, and other filings. This is standard practice. They're telling you that if you want the nitty-gritty on all the potential downsides and the detailed financials, you should check out those other official documents. So, what is the story here? ODP is clearly moving towards being acquired. The stockholders have given their overwhelming approval, and the focus now will be on closing the deal smoothly and navigating any remaining regulatory steps. The risks highlighted are typical for a merger of this size, focusing on potential litigation, business disruption, and the integration process. It's a clear signal that the era of ODP as an independent, publicly traded company is coming to an end. Now, looking at this from a Warren Buffett perspective, we see a company whose shareholders have largely agreed to sell. The overwhelming vote for the merger proposal suggests the offer price was attractive enough to gain broad support. The approval of executive compensation, while having some dissent, is also a common part of these transactions designed to keep leadership focused on completing the deal. The biggest takeaway is the impending delisting from Nasdaq, signaling a significant shift in the company's structure and public trading status. The key risks lie in the execution of the merger itself, ensuring no major disruptions occur that could impact ODP's ongoing business or the new parent's investment. The company's future hinges on the successful integration into Accession Ocean Resources, LLC, and whether this acquisition unlocks new strategic advantages or leads to unforeseen challenges. For investors who held ODP stock, this vote means their shares will be exchanged for cash or stock in the new entity. As per the terms of the merger agreement, it is a moment of transition and the full impact will only be visible once the dust settles and ODP operates under its new ownership structure. Alright, that is our breakdown of ODP's latest filing. What is your take on this acquisition and what it means for the future of office supplies? Drop your thoughts in the comments below if this analysis was valuable. Hitting that like button really helps, and subscribe for more deep dives into corporate filings. Don't forget to check out our Discord in the description for more discussions and community insights. Thanks for watching. See you next time.